Question 34. Cash of 90,000 is transferred from a city's general fund to start construction on a police station. The city issues a bond at its 1.8 million face value. The police station is built for 1.89 million. Prepare all necessary journal entries for these transactions for both fund and government-wide financial statements. Assume that the city does not record the commitment. What information do the government-wide financial statement present? What information do the fund financial statement present? Let's prepare the journal entries for this question. First, let's do it for government-wide financial statement. And the journal entries we prepare for government-wide financial statement follow accrual accounting, which means that the way we prepare them the same as what we do for companies. And so for the cash transfer from one fund to another fund within the same city, there's no journal entry for that. It's like just transfer cash from one checking account to another checking account, has no impact on the net cash amount of the city. Okay, then as to the bond issuance, journal entry is to debit cash and credit bonds payable, 1.8 million. And second journal entry would be the building. So they have the police station built up, and so for that transaction, it's going to be debit building, which is an asset, capital asset for the city, and credit cash. The amount is 1.89 million. Alright, so that's a journal entry for government-wide financial statement. We follow accrual accounting, and the journal entry is the same as what we will do for a company. Next, let's prepare journal entry for the fund financial statement. When we prepare journal entry for fund financial statement, we need to first input what fund we are working on. First, we know that there's a transfer of money from general fund for this construction of police station. So for general fund, journal entry is to debit other financing uses, transfer out, and credit cash. So this other financing uses, transfer out is actually account we use when we have this type of transfer out from one account to another account. So we debit other financing usage, transfer out, and credit cash, 90,000. Okay, and then as to the second fund we need to use, that is called capital project fund. So we use capital project fund to take care of those capital assets. So first is going to be related to the transfer in. We debit cash and credit other financing sources, transfer in. So that's another account. So that's another new account. 90,000. Second journal entry is related to the bond issuance. We debit cash, but we do not credit bonds payable. Instead, we credit other financing sources, bond proceeds. So which means that as to the other financing sources, it could be transfer in or bond proceeds. And the total amount is 1.8 million. And then the last journal entry is related to the building itself. When company, as the city actually have the buildings built up, the journal entry is to debit expenditures, building, and credit cash. So we do not recognize those long-term assets on book. Instead, we recognize it as expenditures. So that's expenditures, building, and cash. The total amount is 1.89 million.